Hi, welcome to the Investment Blueprint. I'm your host, Raghu Kumar from Rain Platforms. The Investment Blueprint is a podcast where I interview traders, investors, quants, and finance professionals in the space of retail trading and investing, with the goal of helping pass on their knowledge to you. Today, I interview Sunil Mangwani from Fib Forex 123. Sunil has been consulting and trading the Forex markets for the last 18 years and devises trading strategies based on his vast knowledge and in-depth study in the field of technical analysis. He specializes in trading with price action and Fibonacci ratios. He uses the Fibonacci ratios to effectively trade advanced chart patterns such as divergence, Wolfe waves, and harmonic patterns. He has developed and patented his own proprietary harmonic pattern. He has also developed a currency correlation indicator to select the ideal currency pair to trade in a given market. He trades these patterns on the live markets with a consistently profitable performance. Sunil also actively trains and mentors many traders around the world through various online and offline workshops. Today, we cover this Forex trader's successful journey with the markets. So Sunil, welcome to the podcast.
Hi, Raghu. Good to be over here. Nice.
I like your trading setup. You've got the monitor set up behind you. Is this where you trade from every day?
This is where I trade from every day. Don't really use the multiple monitors too much for my trading. It's more for my sessions. So when I conduct my sessions, I have different charts showing up for different, as you mentioned. So I do have my currency correlation indicator. I have a proprietary indicator of the harmonic pattern for which I've developed an indicator. So I scan my charts and it gives me those setups. So I have these monitors to help me monitor the markets. That's about it. Mainly.
Sure. Yeah. Awesome. So let's start with your just kind of general, introduction to investing and trading, right? How did you get introduced to the financial markets at large?
Oh, this was a very unique, different thing. Before I got into the trading business, here in India, in my hometown, we had a construction business, so it was a family business, doing pretty well, all good. But somewhere I was not really happy with that because you don't really need to use your brains in that. You're just building something. Your architect draws up the plans, executing it, and there was a little bit of something. So I had shifted to some home-based work in those days. We were doing some outsourcing, converting drawings to AutoCAD. Digitizing was a big thing, just started off. Somewhere I came across currency trading and not anything else, but just currency trading. And the fact is that even today in India, uh, currency trading is not allowed for Indian residents.
Right.
So the RBI does not allow residents to trade in the international currency market. You can trade the Indian derivatives market.
Right.
So in those days, obviously, there was nobody, and Forex trading had just started off. And there was nobody to guide me, but somewhere that interest picked me because of technical analysis. And I have background that I graduated in maths and physics. So right from the beginning, that Fibonacci ratios really interested me, doing mathematics and kind of a structure in the market. I learned it on my own entirely. There was nobody to mentor me. I would go to Google and, like what is a MACD, what's an RSI, those kind of things. And that's how I got introduced to trading. Somewhere got my interest a little more, weaned off my main business and joined this slowly and steadily. Of course, it took me some time.
Sure.
But it was a very different journey.
Yeah. No, so you mentioned the Fibonacci ratios. We're going to talk about that, at length. But just generally, what is it about something like a Fibonacci ratio which kind of like captivated your attention?
Well, first of all, my interest got picked more because this is a mathematical series. So having a background in maths. So basically, the Fibonacci series, it's a number of series which was discovered earlier in those days by Mr. Fibonacci. And so it's a sum of two numbers consecutively gives the third number. So it's a series which goes on to like 1 plus 1 is 2, 2 plus 1 plus 1 is 2, 2 plus 1 is 3, 3 plus 2 is 5,
Right.
5 plus 3 is 8. So this keeps going to infinity. But somehow in nature, what happens is the unique part of this series is you take any two numbers and you divide it. the result will always be 0.618. You
Mm-hmm.
divide 5 by 8, you divide 8 by 13, or so on and so forth. And other way around, you divide two numbers, the result is always 1.618.
Mm-hmm.
So this 618 is known as a golden ratio. And it occurs in nature, it occurs in the human body, very interesting aspects to
Wow.
it. So the pyramids are based on the Fibonacci ratios, on the golden ratio.
There's also proportion with like, what is it, your arm length to your
Yeah, very interesting. So if you take your arm length from your shoulder to your, fingertip, and
right.
you take the length to your elbow, you divide the two, elbow to
That's
this,
the Fibonacci ratio.
it'll be 0.618,
Wow.
always. And somewhere, so it just came into trading somewhere where, since I believe because it's linked to human nature, because humans follow this number, nature follows this number. So humans are kind of attracted to this. So it started off as a level of support resistance. So 0.618 becomes, so you have market going up and it retraces or it pulls back. The expected support is supposed to be 0.618. That's
Mm-hmm.
where the Fibonacci ratio comes in. That's the main ratio. Then you have more ratios. And it's become more like a fulfilling prophecy because a
Right.
lot of traders are looking at
Are
that
looking
level,
for it. Right.
and a lot of traders will trade at that level, and that's one of the reasons why it tends to work. But again, like in trading, like everything else, something really works, everybody follows it. You should do it with a twist, because everybody's doing the same thing. You're probably going to
There's
end up
no
as
edge. Right.
there's no edge, right? You
Right.
end up as a statistic. So
Sure. Got it. I mean, it's a super fascinating, right? Especially when you
yeah,
can link it to a natural phenomenon. I think that's really
yeah,
amazing.
absolutely.
So something else you talk about, even on your website and even in our, previous conversations, is the three M's, right? So essentially what you say is an effective trade plan is one which incorporates the three M's,
Right,
method, money, and mind.
right.
Please tell me about the three M's of trading. What are they and why are they important?
Well, this comes from my own experience. When I started trading, like every other trader. So technical analysis is the thing. Now, forex markets have been attracted to forex mainly because technical analysis comes first in currencies. If you compare it to any other market like equities, commodities, you will have fundamental factors also playing a very large role. Equities, you would look at the performance of a company, and then you would use technical analysis, secondary method, to find out a good point for entry or exit. Now, in currencies, because it's a global market, because there's no central exchange, what you see on the charts is what you get.
Mm-hmm.
So, technical analysis works first, which is a huge advantage in a way. Yes, fundamentals do matter, but on a smaller scale, not very large. So, charts is what you have. Now, what happens is, unfortunately, even today, most traders who come in to trade the forex markets, they start off with technical analysis, obviously. And in technical analysis, you do a search today for courses, everybody talks about indicators,
Right.
90%.
Yeah.
Most indicators are lagging, and the new ones really don't know it. I really don't blame them. It's not their fault, because since everybody's talking about this, you think that this is the way to go.
Sure. Yeah.
So I started off the same way. I studied every technical indicator, having a maths background. I decimated everything, I dissected everything, used this, used that. I never really made money. Initially 1 or 2 years, I would consistently lose money, literally. And
Yeah.
I didn't know what was wrong, because I was doing everything. I tried every indicator. It was then I realized that there's something which is missing, which came to the three M's.
Hmm.
Your Along with the method, which is your technical analysis, my three M's comprises of money management and the mind factor. Now, if I distribute the three M's on a scale of 1 is to 10, your money management takes up about 5 parts of 10. Your mind factor, which I simply call as discipline and patience, will take up about 3 parts. And the method, your technical analysis, takes up only 2 parts.
Hmm.
So the method is actually the least important part of your trading process.
Right.
And within this, also, most people use indicators. So your importance really comes down. So it's not surprising a new trader will follow probably 1 part out of 10, which is why he or she tends to lose money.
Right.
Once I changed my method and I concentrated on risk management, threw away all the indicators, my trading started improving. But to be honest, I was still not consistently successful till you get that mind factor in place.
Right.
And that is actually one of the most difficult things in trading. You may be a good technical analyst, you may have excellent risk management policies, but if you don't have the discipline and the patience, you're still not going to make it. And I believe personally, over the number of years, what I have done, the number of traders I have mentored, your mind factor is also a skill which needs to be developed. So
Sure.
it's not like a trader is born a good trader. He develops the skills. Like you develop technical analysis skills, mind factor comes from experience, going through it, losing money, learning from your lessons, being patient, and deciding on a system. So today, when I mentor my students or traders, the first thing I always tell them is if you don't follow 3 M's, I could give you the best method, you're not going to succeed.
Right.
Trading has to be a combination of these three, and it's not easy.
Sure. Yeah. And I would guess a lot of traders probably place a too much emphasis on the method, right?
On the method. That's
They
right.
probably don't give enough weightage to the money management and the
Right.
mind, I'm guessing, right?
Right. Right.
Yeah.
Absolutely. Absolutely.
Got it. Yeah. So, obviously you mentor a lot of retail traders, right? That's kind of your forte.
Right.
And you're obviously also associated with the Forex markets for the most part. For a retail newcomer who wants to get into the Forex markets, right? What are some good ways for them to do that?
Okay, let me start with this from with an experience of mine. So, along with
Sure.
mentoring retail traders, I also do some mentoring for institutes also.
Hmm.
And it started off first when I still have my setup in London. I would be regular uh, performance or at the World Trade shows over there. I used to be a speaker over there. And I came across one gentleman when I was doing a talk on risk management over there. And he turned out to be the head trader of a central bank in London, of a huge bank. And he wanted me to put this rules of risk management for his traders. I was initially like, I mean, you guys trade billions of dollars and you want me to come and talk to you. He says, no, we have our own techniques. So that's a very different thing. I just wanted to put some discipline. And my condition was I need to spend 2 days in the trading floor with them to see what policies they're using, what analysis they're using, so I can use the risk management. And when I saw that, it changed my way of trading completely, and especially for the Forex markets. Now, a lot of people are not aware of this factor. So when a new person comes in, currency trading today, out of the entire turnover of roughly about $6 trillion, about 65 to 70% is controlled by banks,
Right.
institutes,
Right.
and a group of 10 banks also that too.
Yeah.
So a rough thumb rule, if you take 10 banks doing roughly what about 4 trillion, so each bank would probably trading billions of dollars.
Yeah.
They have the capacity to move the market. And
Right.
I'm not saying manipulate the market. They have the capacity to
To
move
move the
price.
market. Right. Right.
They have huge volumes.
Right.
And the retail traders are their fodder. I actually call them the fodder because they want to trap the retail traders and take their money. It's a simple question of supply and demand. When somebody makes money, somebody loses money. So the institutes, when they want to make money with these huge orders, they need somebody on the other side of the trade and they trap the retail traders. The whole policy of trading, institutional trading, is to trap the retail traders because they know exactly that they are going to use indicators. These are the levels they're going to buy at. This is an expected level of support. This is where they're going to buy it, and they will drive the markets over there. So when a new trader comes in very specifically with the Forex market, first thing you have to understand is the opponent of the other side of your trade is an institute.
Right.
That guy has got deep pockets. He's got the best of resources. So you're already at a disadvantage.
Right.
And if you are not careful about your trading, and if you just use lagging indicators and don't understand supply or demand, you're not really going to survive.
Got it.
So Forex, you have to first understand the market. It's unlike the equities or the commodities. You have to understand who's trading it, why they're trading it, what makes price move. Once you have that basic understanding and you start approaching the market from that perspective, it definitely gives you an edge.
Sure. Yeah. No, and that's something you have to know, right? It's probably just one of those things where unless you know it, you're going to probably wonder, why is it so difficult for me to make money? But then once you're aware of these forces, then you can do something about it, right?
Exactly.
Yeah. So one thing I also wanted to talk about was the diamond pattern, right? This is what you're kind of mostly known for. Tell me about it. How did you kind of come up with it, and how does it work, and why does it work?
Okay. So here's a trade secret that I'm going to let you on over here. Again, it came from the institute. Now, we talked about the Fibonacci number, right? 0.618. So the general tendency is, let's say the market's on an up move and it tends to retrace back. A lot of traders will tend to keep a buy order at a 0.618 level, expecting that price will come here and it should bounce from there because it's expected to be a strong level of support. Now, you know this and I know this. Every retail trader wants to do it. Every professional trader wants to do it. Obviously, even the institutes know this. So what they will do is they will get priced down to the 618. So they make money three ways here. They will drive price down, they do their selling. At 0.618, they'll tend to come in with some buy orders, so price starts going up. And when price starts going up, some more retail traders are going to join the gang over there, saying that, oh yeah, this support really worked. And then it goes up. And then suddenly the institute is going to sell and take out all the buy orders and take it down below the 0.618 level, take out all the stop losses of these guys, and then your actual trend starts. Now, in technical terms, this also creates something called a divergence. Everybody knows what a divergence is, and this does create a divergence. Because if you look at an indicator where price makes a lower low, your indicator would probably not make a lower low, it will make a higher low, which gives you an indication that there's something wrong with this move. Now, my diamond pattern is based entirely on this, that this particular phenomena, and there is one secret Fibonacci ratio here, which again came from the institute. So when I saw these guys driving price past the 618, my question was, why this level? Why not another level? Why not lower? Why not higher? And there is a method. Fibonacci ratios, surprisingly, now even I won't be able to explain why, but they price in the currency market specifically, and even most of the major markets follow the Fibonacci ratios really to a large extent, because that's where the institutes will drive price down to that particular level and buy it at that level.
Right.
The diamond pattern is based just on these Fibonacci ratios. Any harmonic pattern today is a 5-wave pattern.
Sure.
All 5 legs of the pattern are decided or derived by Fibonacci ratios. So this diamond pattern has got a particular Fibonacci ratio to it, that if 2 Fibonacci ratios price goes down to one particular level, taking out all the stops at 0.618, as I said.
Got it. Yeah.
And it fulfills 2 Fibonacci ratios there, the software automatically calculates it and you have a buy trade over there.
Got it. Got it.
Vice versa to the sell trade, and it gives you a setup. And it works. Of course, in trading, nothing works 100%.
100%, of course, yeah. But I mean, it gives you an edge, potentially.
It gives you an edge.
Yeah.
So that's where it came from.
Got it. That's amazing, because what I appreciate about that is you have been able to kind of absorb all the learnings that you've seen and witnessed over the years, and using all of that is how you've come up with this, right? It's not like some random thing you came up with. So it makes a lot of sense. Something also wanted to ask you was, you have developed a currency correlation indicator, which helps you select the ideal currency pair to trade in a market. And this is something I face. I've traded, spot Forex in the past. And sometimes you're like, yeah, I want to buy USD because of XYZ reasons. And you realize there's like 10 different USD pairs. What do I trade?
Exactly.
So how did you kind of come up with this, and what's the basis over there?
But this honestly is not my invention, if you would call it, but it's been around for a long time. I just developed an indicator very specifically for the MetaTrader platform for my own trading. which goes along with my diamond indicator. But you can get this for free. I think there is a website called METAF, M-A-T-A-F, metaf.net, where you have this currency indexes live data charts available for free. Now,
Hmm.
the biggest advantage of currencies is what you're doing in Forex is you're trading two instruments at the same time. Right? So when you're trading Euro USD, when you buy the pair, you're buying the Euro and you're selling the USD.
Right.
Now, this is unique because no other financial product does this.
Right.
So to take advantage of this makes a lot of sense that if the Euro is growing strong entirely on its own against all currencies, and if the USD is kind of weakening on its own against all currencies, it would make a lot of sense to buy this particular pair.
Sure.
So what happens is, even if today I have a technical setup, let's say my diamond pattern gives me, let's take for example, the GBP USD says that we have a buy situation. I will still look at my currency correlation indicator. So if the GBP, I want to buy this pair, the GBP is strong, the currency index of the GBP is showing strength or momentum, it would make sense. But
Sure.
there are a lot of times when I have a buy setup, let's say on GBP USD, and it says the GBP is kind of losing momentum there. It's not going to go up. But the USD at the same time is also losing strength. So
Hmm.
you will not have these two pairs giving a momentum move in the currency markets.
Right.
So what you tend to do is you look at all the indexes, and let's say the GBP is picking up momentum. What other currency is losing momentum at that time? Let's say the JPY I see on the currency index is losing momentum. It would make more sense for me to trade the GBP JPY.
JPY. Right. Right.
Right. So what I'm doing is I'm trying to find the best currency pairs to trade based on their momentum and then apply my own techniques to it, but it gives
Sure.
you an edge
Got
like
it.
that.
Yeah, and I'm guessing you have to make some sort of a trade-off over there because the GBP
Right.
JPY might have a higher spread potentially,
Exactly.
right?
Exactly.
So you have to probably weigh the pros and cons, right?
You would. Now, one point, again, as you mentioned, for new traders over here, I would just like to mention that a lot of people come in looking at trading currency markets for intraday. It's
Hmm.
just a kind of misconception that's a 24-hour market and you have movement all the market. But intraday trading, you would tend to lose more in intraday. Forex
Right.
works better for longer term trading. One simple reason is if the opposite side of a trader is a bank, that guy doesn't trade on a 5 minutes. He'll
Right.
probably trade higher term time frame. So he's got
Right.
money to move the markets. When you're trading on a 5 minute time frame, you are trading against most retail traders, again, where the price action is erratic.
Right.
So when you are trading currency pairs like this, I hear a lot of people saying that I don't like to trade the GBP New Zealand because it's got a large spread. Fair enough. If you're trading intraday, it does have a large spread. But if you trade swing and you're looking to capture a move of about 100, points, then the spread really doesn't make a difference.
Right.
And my advice always has been try avoid trading intraday.
Hmm.
Go for larger term trades. It gives you more time to plan your trades, gives you better movements, gives you better risk to reward ratios. No?
Sure. No, it makes a lot of sense. And that's something we all get caught up in, right? Everyone
Mhm.
wants to trade intraday and make that quick buck, but
Exactly.
you have to
Exactly.
find, you have to have the patience to kind of escape that.
Right.
So you've been around the forex markets for a long time, right, Sunil? And you've probably seen a lot of changes over the years. Obviously, forex is the most liquid market in the world, as you alluded to
Right.
earlier. Just generally speaking, right, over the past decade, say, how have the FX markets evolved?
Oh, I think the use of technology, the internet coming in has really changed the market. When I started almost close to 20 years now, the market had just opened up.
Right,
Initially, even before that, Forex was the playground of the institutes and the banks.
right,
Retail traders would not really come in because you needed access from a large platform through a bank. You needed a large capital. When it started opening up, you had the brokers who take the data from the institutes, from the banks, and they offer you a trading platform. They started off offering retail traders with small amounts, which is possible. Today, it has evolved so much that today you have brokers, hundreds of brokers, giving you tight spreads, giving you lower commissions. There's lots more exposure. There is lots more data available today because of the internet.
Right.
And the banks, they are the market makers. They're known as the market
Yeah.
makers.
Yeah.
So they supply the data, buy and sell data to the broker. So you have a lot of excess, but unfortunately, there's been a downside to it.
Hmm.
A lot of brokers, in fact, I would say in Forex, almost 60 to 70% of the brokers are non-regulated and
Right.
they're just out to make a quick buck.
Yeah.
You have to be very careful about choosing a broker. The simple fact about the Forex market is when you place a trade, your broker's job is to take your buy or sell order, put it up in the market where the banks are trading, and find an opposite. If you have a buy, find a sell order. Now, today, a lot of brokers, they try to entice you, say that we'll give you lower spreads, we'll give you lower commissions, and we'll give you a bonus on your, deposit or
Deposit.
whatever.
Yeah. Yeah.
It's just a trick because what they do
Right.
is they'll take your buy order, they will not put it in the market, they will trade against you.
They'll trade against it. Right.
Exactly.
Right.
So they know where your stop losses are, which puts you at a huge disadvantage.
Disadvantage. Right.
And you're not even trading against the market, you're trading against your broker. So you have actually no chance of doing it. So
Sure.
technology has brought a lot of change, advantages and disadvantages, both of them.
Got it. Yeah. And one thing also wanted to ask you was you mentioned the fact that in the Forex markets, it's largely a function of technicals, right? Less to do with fundamentals versus, other asset classes, right?
Right.
So that got me thinking, how should a retail trader actually incorporate fundamental data, right? Because they have all these tools and, they can use the diamond pattern and things like that, from a technical basis. But when it comes to fundamentals, what are some basic fundamentals, a retail trader should be aware of?
First is the news announcements that we have every week.
Right.
A lot of traders want to trade those news announcements because that's what kind of moves the markets. You have the
Right.
news announcements, price goes up, price goes down. But again, look at it from this perspective. It's the institutes know that the retail traders are going to trade there, so they tend to place traps around those levels. Now, as far as fundamentals are concerned, what you should be concerned with is what are the factors which drive the markets today, the fundamental factors. Unless you are really a position trader, I mean, you want to buy the euro USD and hold it for about 6 months, then you need to be concerned about the central bank policies, interest rates, inflation. But most retail traders, individual retail traders, are not. They
Right.
are out here to take small trades, get in and out of the market.
Yeah.
Like every market, there is a cycle to the Forex market. So it moves from supply to demand, etc. The only fundamentals that you have to keep in mind is find out the strength of a currency, which we do through the currency correlation indicator. Try to
Mm-hmm.
stick to that one. Keep a watch out for news, but do not trade the news announcements. Wait for price to let the amateurs get taken out and then trade it because that's where you get your volatility.
Sure.
Again, because it's a 24-hour market, there are certain times of the day where you have volatility. News announcements where the calendars are available everywhere, it
Right.
creates volatility.
Sure.
As a trader, you take advantage of that. So
Mm-hmm.
as fundamentals, these are the only two factors. If you are a day trader, which I don't approve of, or even a swing trader, these are the only two factors you need to keep in mind. Rest everything is on the charts. So,
If you have an open position, right, say on the USD or whatever, and there's a huge, announcement coming out, and there's a lot of kind of, speculation as to what that number might be, right? Do you ever recommend closing your position down and then opening up a new position post announcement?
uh, for certain fundamental factors, yes, I do.
Mm-hmm.
Like, for example, you have the employment data which comes out
Right.
on the first Friday of the month.
Right.
So, for those kind of things, even if I'm in a longer term trade and I'm approaching a Friday when that news is coming out, either I close my position or maybe, I'll take some part profits off, move my stop to a break even, and then let it ride. Because there are certain, so you have like the employment data, the interest rate announcements. These are the things which really can move a market.
Yeah. Yeah.
But with most of the data, I would not recommend closing it.
Hmm.
Monitor your trades. Try to take some profits in case there is a strong movement, but take advantage of the movement.
Sure.
That's what I would recommend.
Yeah, makes sense.
Yeah.
So finally, let's talk about Fib Forex 123, right? Obviously this is your company, and it's also where you share a lot of your insights, on your website. Tell me about it. How did you kind of come up with it? What are you guys trying to do?
But it actually came about from my own experience. So
Okay.
when I started becoming successful, I had friends who were trading with me. I could see that they were not really successful doing well. So it started off with a perspective saying that, okay, this has worked for me. Now, this is what you should do. And eventually I started designing courses based on price action, Fibonacci, and 3Ms, the most important part of it. So the website is Fib Forex 123. So you have Fibonacci, you have Forex, and there is a 123. So 123 is a particular technical pattern, again,
Hmm.
based on the Fibonacci ratios, which works most of the time. Using these concepts, I started developing my courses because I would still see a lot of traders who were not successful, even though they were good technical analysts, they were disciplined traders, but there was something missing over there. So my policy or Fib Forex, what it tends to do is whether you're a new trader, whether you're an experienced trader, on a personal mentorship, what we do is we put together all that you've been doing, find out where your mistakes are, try to overcome those mistakes, put down a trade plan for you based on all these things. Again, it's come through my experience. Again, because I have lost money in the initial years, I know exactly the kind of mistakes that a new trader makes.
Sure. Yeah.
So it got developed from there, helping traders more. Now, as far as the future is concerned, my intention is to make a community of successful traders who would probably, it's like paying it forward. Go forward and talk to some other traders over here.
Sure.
Give them the correct path. My
Yeah.
job is to show you the correct path. Whether you
Yeah.
succeed or not is entirely up to you.
Sure.
Put down the principles. I have always been honest with my traders is that this is not a get rich overnight scheme. You come in over here and you take the course and you start expecting to make money from the first month, it's not going to happen.
Sure.
You
Yeah.
have to train your mind, you have to have experience, you have to practice, you have to put in the efforts. Only then you're successful. So it's more like a marathon than a sprint.
Sure. Yeah.
And you have to look at it that way. But
100%. Yeah.
once you do it, it's a lifetime skill.
Yeah.
There's nothing else that you have to do.
Yeah.
So it's a question of going forward, paying it back, giving what
Yep.
the markets have given me today.
Yep.
I'm doing well in the markets.
Yeah.
My life, if you look at it that way, that's all I do. And since I'm swing trading, I'm not tied up to a desk all the time. I
Sure.
have enough time to, do some more research, mentor some students, trade some more, travel whenever I want, take a break
Yeah.
whenever I want. So
Which is
my
really
way of,
important. Yeah.
which is important, exactly.
Yeah. Yeah.
I want to give back what the market has given me. So in the future, what I want to do is build a community of traders. And we are working on a couple of projects here to put this forward. I think I had mentioned it.
Yeah.
There's one company here in India. That there's a broker, the large broker. They've developed a software for the visually impaired people.
Right. Right. Right.
So I'm associated with the foundation where we take these visually impaired people for adventure activities. So we take them for paragliding, we take them for mountaineering, and it just gives them a lot of confidence.
It's amazing.
Now,
Yeah.
my intention is to give them a skill, so they are not dependent on anybody for a job. You can trade. Technical analysis works on any market which has sufficient volatility. So what I'm doing in Forex can work just as well on the Indian markets. So we've started a pilot project of getting these people trained on the visually impaired platform here so they can start trading for a living. And this is what I want to do. One is remove the stigma of trading. Everybody still thinks that trading is more like gambling. I mean, you
Right.
can never really make it.
100%. Yeah.
And the statistics actually say that it's not even 2% of the retail traders who will make consistent money. And
Right.
I'm not talking about money consistently.
Yeah.
So, but the simple fact is, and this has always driven me from the beginning, if somebody is making money, there has to be a way.
Right.
My intention is to lay down the proper path, give that to you, remove the stigma from trading, and you can make a living from trading as long as you approach it in the correct way.
Sure. Yeah. And I would be very curious to see what the results of that program looks like, in due
Oh yeah,
time, because,
yeah,
of course, I don't know anything about it, but, one thing that's very interesting here is that you're essentially eliminating a noise factor, right? Which
right,
is just, generally information, it's like information overload, right? Which is what we
right,
are normally used to because we're seeing
exactly,
everything. And, when you
exactly.
eliminate that sense, I guess, and you're just kind of trusting your other senses, I guess if you have the right platform, maybe it
Right.
leads to better decisions in the markets, right?
It does.
Yeah.
As you rightly said, what I've experienced is I've just started working with these people right now. But even with traders, for somebody who comes in new and he or she does not have any background, you know, I call it baggage. If you show them the correct path, they make better traders because they
Yeah.
don't come in with that baggage that I want to
Right.
use indicators and I want to do this and I want to do that. If you show them the correct path, so right from
Hmm.
the beginning, if you put a trader on the correct path and give him the proper information, he or she has a much better chance of succeeding than most retail traders.
Sure. And also probably discipline, right? They're probably just generally more disciplined in life versus, the rest of us. So,
It does.
um,
That's why they say that
yeah,
military people, military personnel,
right,
they do actually make better traders.
right.
And would you believe it? I have personally seen it. Women are better traders than men.
I've literally been saying this for so many years, Sunil, and
Yeah,
that's
absolutely.
not some weird thing we say just because we notice that most traders are men. The reality is the women that I've been around who
Yeah, they
trade
are.
consistently and
Yeah,
actively, they tend to be
exactly.
better traders. Yeah,
They tend
you
to be.
know, yeah,
I have seen they are less emotional, surprisingly,
yeah,
against most things than men are. I
right,
mean, if a man like me, if I lose money, I would want to go back to the market with revenge trading and try to get back some of it.
right,
A woman can be very cold about it, that okay, it's gone, it's done, let's move to the next step.
yeah. That's amazing. Yeah. Um, so finally, last question here, Sunil, right? This is what I end every episode with. What are your goals for the next 5-10 years, you personally, and also with, Fib Forex 123?
I think we already discussed part of it. So my
Sure.
goal is to put down a community of traders who would provide the correct path for others to come and remove the stigma from trading. That is more important because I remember when I joined trading, we had a family business. And when I got into trading, my family was like, "Are you crazy? I mean, you're leaving aside a good business and you're getting into gambling. I mean, this is nothing like gambling. I mean,
Right.
this is a mindset which everybody
Yeah.
has. And since I am trading consistently for a living, and I have my students, a lot of traders I know who do that consistently. It takes time to get over that. I
Sure.
want to put this down. My goal is in the next years to come, put down a system for traders, saying that it's possible. It's going to take time. It's going to take a lot of effort from your part. It takes a lot of patience and discipline, but it can be done. Just remove this thing that trading is gambling and give back to the market whatever I have received to the market. That's always
Got it.
been my intention.
That's amazing. I really like that, Sunil. And I think, what I appreciate about you is you have lived the walk, right? You've actually lived this whole trading lifestyle for decades. And you've basically found ways to give back to the community. At the same time, you also actively trade, and you've got students, all over the world. So you seem to be the real deal. So amazing. Thank you so much, Sunil. That was an amazing interview. We will include all the relevant information, in the show notes. So thank you.
It was a pleasure being here, Raghu. Thank you so much. I really like it, when you have a platform to put this across to people who get aware of what the true facts are. And that's always been my intention. Thanks a lot. Thank you.
Thanks.